What's up, everybody? Jeremy Ritz for another Courage Pays Better Than Fear mini. The last one we talked about double bottoms and how it's a great bullish pattern to trade, day trading, swing trading. And now we're going to talk about, you guessed it, double tops. If you're a bear, if we're extended into resistance, this is a pattern that you want to know how to trade. And we're going to talk about that here in today's Courage Pays Better Than Fear trading mini. Let's go. So I'm putting together a series of educational videos on a variety of patterns that you can use whenever you are day trading, swing trading, heck, even if you're setting up long-term investments, looking for areas where you know, hey, this is probably not a good time to buy. By knowing these simple patterns, you'll be able to do just that. And what we're going to talk about today is a bearish pattern known as the double top that occur around resistance areas. And when we see them, we know more than likely we're probably going to see a bit of a correction or a downturn in a particular stock or an indices. So we're going to look at that so you could see what it looks like on the chart. I'm going to go through the three different types of double tops as far as the way that I categorize them. We're going to take a look at them on the chart so you know how to approach them, how to trade them, swing trade them. And I'm excited to share all that with you. Let's take a look at the chart. All right, so let's talk about double tops. And let's first go over what exactly is a double top. Well, it's just like it sounds. It is two peaks like we see here where the price action goes up, it makes a high, and then it drops, and then it is followed by another high. So this tells us if we're thinking about this in terms of sentiment and in terms of price action, the bulls are driving the price up. They're making peaks. Sometimes you'll hear these tops called peaks. And then what happens is after that first peak, the bears drive it down. There could be some profit taking there, and it causes what is known as the trough. And then what happens? The bulls drive it back up, and then the bears step in, drive it back down. And when we see those two peaks come into play and we see it fall, that is known as a double top. And it tells us that, hey, we're probably going to see a correction in price on this particular stock. Now, there are three types of double tops that we typically will see in markets. One is your symmetrical double top, where those highs are equal, like we see right here. You can have a lower high, higher high double top, and you can have a higher high, lower high double top. Now, the types of double tops that I like to trade best, not best, are those that make a higher high and then a lower high, because this says to me that, hey, the bulls are losing steam and the bears are starting to take control of this particular ticker. Now, the one thing that we have to keep in mind as well, and this is similar to what I talked about with double bottoms, is that the middle part of that pattern, that's going to be known as the neckline. So whatever that middle candle is, once we close below that middle candle, whether it's the candle body or the candle wick, that confirms the pattern and tells us that, hey, we're probably going to see this thing drop. Now, remember, just like all chart patterns or all strategies in the market, they work some of the time, but not all the time. But this is something that is reliable, especially when you're finding it near a resistance, near an all-time high. And we're going to take a look at that here today on the chart of Amazon. Okay, so going back to, what is this, 2018 here on Amazon, we can see some top patterns, right? And so if we're looking here, Amazon had this great run from really August and September of 2017. It was consolidating right here along the 100 SMA. And then you just had this wicked move higher of about $55. So anybody who was in on that trade or was invested in Amazon at that time, what a great move. But we see this gets extended far above those moving averages, above the 100 and 200. And we see that this thing has ran so much, and knowing that it's at a resistance, that it's extended, it's at an all-time high, that we're looking for a bit of a correction. And what comes into play here? We get a higher high, lower high, double top. Okay. So here's our higher high. Here's our lower high, right? And what we see right here, this middlemost candle, and I'll zoom in on it here in a second, we see where our neckline is. So we know when we're watching and waiting for this pattern that once we close below the wick of this candle, this lower wick, which we do right here, that it's game on, that this pattern is confirmed. And what happens from there? You get a massive drop down. You do find some relief here at the 200 where it does get a bounce, but off of that bounce, it just drops and goes below that 200 and moves sideways. So this could have been a profitable swing trade for you. Remember, this is on a daily chart, but that's all it is. We're looking at a resistance near this all-time high. We're looking for those two peaks. Here we have a higher high, lower high. Here's our neckline. We close below it and bang, we drop down. Now, we're going to look at this on a different time frame. Let's look at this on a 4-hour time frame. And let me bring this here. And let's just go back and see if we can find another double top pattern. And here we go. We could see we're just grinding higher, grinding higher. We're above that 100. We push up, we come back down, we bounce off of the 200 here. There's a double bottom. And then, oh, what do we see after we push higher? And again, these are going to be funky sometimes, but you do have a bit of a double top that comes into play here on your 4-hour chart. There's a lower high, higher high. Here's your neckline. Once it closes below that, boom, we get it here. It drops, and there's your profit. Again, this is on a 4-hour time frame. Again, you can find double tops, double bottoms on all time frames, 4 hours, dailies, weeklies, 3 minutes if you're day trading, 1 minute. They're out there, okay? And they are patterns that we want to pay attention to, especially when we're at resistance areas, when we're at all-time highs. You want to be ready because think about it in terms of a rubber band. I often use this analogy with my coaching students that you can continue to pull a rubber band. You could pull it and pull it and pull it, but eventually what's going to happen? It's going to snap and break. And it's the same thing with the stock that goes higher. Eventually, people are going to take profits, and it's going to get to an area where it's extended too far. And what's going to happen? The bears are going to jump in on that as people are taking profits. They're going to short it, drive it down, and there's money to be made on the downside. So be aware that when you're extended near resistance, look for those topping patterns, those double tops, and set up a short to work out in your favor. So that's a double top. Take that, apply it to your trading as you're doing your chart analysis so you could be prepared for when these patterns show up. And also, in terms of your long-term investing, if you're wanting to purchase a particular stock and you're seeing that it's extended into resistance and you're seeing a double top pattern, then you know, hey, this is not the place to be purchasing the stock or dollar cost averaging. If you see that double top come in, think to yourself, hey, this is probably going to drop. Wait for it to come down and correct, and then you could buy shares. And this is just a way that you're educating yourself so you know how to make intelligent purchases of stocks that you want to own so that you can grow your wealth over time. And so hopefully you found this video helpful. Leave me a question in the comments, share with people that you are trying to educate about the markets. And if you're interested in learning more about trading, if you want to learn how to trade the markets, hit me up via email, couragepaysbetter@gmail.com. And be on the lookout for more videos coming from Courage Pays Better Than Fear Trading. And this has been Jeremy Ritz for another Courage Pays Better Than Fear mini. Have a great day.